Thanks for joining for the class, and I wish you a very good day today. Let me tell you, this exam has 3 sections. So imagine you are sitting in your exam, and so the exam is for 3 hours. 3 hours has 3 sections. Each hour has a section. So section number 1 is about business, which is develop the business strategy, evaluate business ecosystems and business environment. What does it mean? What is an ecosystem? What is an environment? This is I'm going to explain you when the relevant chapters will come. But so far, this is about a business decision. This is a very interesting area for everyone because almost all of us are from finance background. So we are very good in numbers, financial statements, balance sheet, income statement, cash flows, dividends, share prices. So this area is a typical finance area, which is, if you see, the weightage is minimum 15% and maximum 25%. So if you move forward, then we have a third area, which is risk and control. So being a CEO or a CFO, you're always concerned about risk management in terms of operational risk, systematic risk, and systematic risk. Risk is embedded in business operations, so we need to look into business risk, how many risks we have, how to mitigate them, what risk has been ignored, which we need to redefine in our final exams. And what is a sound control environment? We'll familiarize with some terminologies related to COSO, Committee of Sponsoring Organization, ERM model, and a couple of other frameworks will be helpful for sorting our exam in general. So there are 3 sections. You just need to go through and reproduce them in a very analytical and strategic way, reporting to the board. So that's a comfort part, because I know some people don't like to have figures. So when they see figures, they get upset. Or here, you don't just need to be, you need to be a strategic thinker. You have to act like a CEO. You're thinking about how to set up a business strategy. You are thinking about risk and returns and controls, and typical financial analysis that our sale has increased 10%, our cost has increased 4%, our asset has increased, say, 20%. So these kind of typical financial terminologies and analysis we will discuss in journal. I'll give you a little bit more idea to the depth of the course, so you can really feel that where it will take you. Because maybe, as already we saw, a couple of you are out of education from a long time. So, but I feel it an opportunity. I don't feel it as a disadvantage or a gap, because when you come in after a long time in your studies, I feel that it actually better, because you have a lot of practical knowledge. You have seen organizations working, and you know the processes. So the process is actually the most important in the learning, and it link it with our final examinations as well. So when we say section number 1, we'll talk about business ecosystem. Ecosystem is an environment. We have stakeholders, we have shareholders, we have vendors, we have customers, we have banks, we have regulators. All of them are somehow connected with you in some capacity. So how to handle them, who are the direct ones, what other models are there in order to theoretically link it with ecosystem. How to do a competitor analysis, very important. If we really want to be a strategic manager, we need to know what our competitors are doing, because if we don't know what they are doing and we're setting our strategies sitting in a closed room, it's not going to work. So always we spend enough time in competitor analysis, how it will work. We'll look into how to analyze a competitor, who is your competitor, in which way they can be your competitors, what are their trends, what are your trends. This is how we always in our course preparation, we have to see this is a competitor, what they are doing, what we are doing, are we better, are they better, should we follow them or they should follow us. And there are typical sub models. If you even if you forgot them, you never studied them, doesn't make any problem, because I'm going to revise them for you. SWOT analysis: strength, weakness, opportunities, and threats. While PESTEL is political, economical, social, technological, environmental, and legal. So couple of frameworks we have that we need to apply on the case given to you. Stakeholder analysis and strategy is very important. So we need to know who are our stakeholders. Stake mean anyone who is interested in our work, in ourselves. Stake means interest. So if I'm a vendor, I'm interested. I'm a customer, I'm interested. I'm a shareholder, I'm interested. I'm an employee, I'm interested. So we all are your stakeholders. How to manage your stakeholder. For example, you are a board of director, which stakeholder you need to look more serious and more consciously and more anxiously, because if they lost the track, you will lose them. So this is very important to look into. How we make a strategy, how we analyze, how we develop, and how we go for new strategic options. So in the questions, it's going to ask us, this is your existing strategy, here you stand, what you suggest to the board to go forward, have new options, new strategies. So here your mind will use looking forward, strategical SWOT, suitability, adaptability frameworks, Maslow's portal models. There are a lot of models we need to go through, but they are really interesting and highly relevant to the thinking. Moving forward, section number 2 might be easy for you. We need to know how to value a business, because when we are a strategic managers, we have to decide, should we buy this business? Should we sell this business? Should we acquire this business? This business is, so we should know how to value. If I want to buy a car, I should know how to value it. Maybe I pay more money for that, but we need actually a mechanism for valuation. So asset value, fair value, market value, written down value, carrying value, any value we need to set up and see in this case which is the most important and relevant business method for valuation. So maybe we get a question for this. How to arrange finance. So we need working capital to run the day-to-day show. We need long-term capital. We need equity. We need so much money to run the company, and that's what is really important. So I'll see how we will go through all of that options that we might can consider for our company, because our role is we are a senior manager reporting to the board, and board is taking decisions. So we are reporting to board, means we need to be strategic, less numerical, more analytic, more communicative, more bigger picture, less smaller picture. For example, you might heard about working capital ratios. For example, liquidity. In this course, while analyzing finances, we are not going to talk about anything about liquidity, profitability. These are day-to-day profit and loss, year ending. No, we are going to talk about share price, dividend, liabilities, interest rates, those who has a long-term impact on the company presence or existence, sustainability, environmental, and what you call ESG, environment, social, and governance. This is our area of focus. I want to use your mental skills, your ability to look forward, your ability to analyze in a strategic way that brings value for the board. And they feel, yes, you are a strategic thinker. And this area is also very important. So risk and control is also very important. Being a strategic manager, first of all, you should know that are you in compliance with the code of corporate governance or not. Now, what is code of corporate governance? We'll study. In America, we have Sarbanes-Oxley, and in England, we have UK Code of Governance. Because this is a British exam, somehow we are going to follow the British strategies more. So we'll see what is internal control, what is internal audit, how to do the strategic controls, how to handle the environment, social and sustainability, risk management. So might be this company is good in risk management, but we as a strategic thinkers, after reading the case, we need to tell them that these risk has been ignored. These are no more has been kept in consideration. So there we will do the risk identification, then we scale them and manage them. How to do it more once that relevant chapter is going to come, I will explain you over there. Foreign exchange is very important because in all the exams, he's trying to build up a multinational company who is working in different countries. And when it comes to money transfer between the groups, so they have some kind of currency gains and losses, which you will see in the financial statements as well. So here is a very important discussion about foreign exchange. Structure of the board, very important. How many executive directors you have and how many non-executive directors. If you're not familiar with executive, non-executive directors, still not a problem. I'm going to explain you who we called it as NED, means non-executive directors, and who we called as independent directors or executive directors. Every company, if you're listed, you should have a risk register, means which tells you that this is number 1 risk, number 2 risk, number 3 risk, number 4 risk, high risk, low risk, medium risk. You know, this is a standard register which I will show you and we will reproduce in our exams. How to map the risk, how to analyze. Very important is the cyber risk, because in every exam is trying to address the IT risk, the cyber security risk, because everything is online. So we are facing a lot of hack attacks from the hackers, and what will be the risk responses and all that things. A very important area. So if you see, if I tell you that in your section number 3, you'll face 3 questions. One is related to IT risk, one is relating to the board structure, and one is related to your internal control environment. So today you know your exam. There are 3 questions you need to prepare for, and we will do all the practices, and you will be very well versed what is the examiner requirements, and you will see like yourself quite linked to. So this was all about the structure of the course. So I'll start with the case. Every time is going to give you some introduction about the industry that we are working in, because we can't operate if we don't understand the industry around us. If you are a school, you have to set your fee according to your competitors or your cost. Or you are a hotel, you have to book your rooms. What should be the price? You have to see like the same facility, how much and what's the terms and conditions. So industry knowledge is really important. Then there is a company, of course, what is the annual achievements, how the board looks, and what are the board responsibilities. And then there is what are the risks they have. And today I'm going to go straight away on financial statements and share price. The reason is that most of us are from finance background. So finance is something that is close to our heart. And if we start from the financial area, I feel that, it's almost 33% of your exam. So we will be able to secure good marks and you will be mentally satisfied that you have done this area, which is quite doable. There's no much complications in that. This is just to tell you, and I told you before as well, that there are 3 sections in exam. So section 2 is your financial reporting, your finance. So which will have 2 questions of equal weightage, means 30 minutes for each question that you have. This is the allocation. And yeah, this is a good area and where we can secure ourselves very easily. Now let's go to the Preseen. Safewell is a company and they have competitor. So Brutto Securities is one of the 4 security companies based in Portland that offers both physical security services and intelligence-led services. So there are 2 types of services, which is in the ecosystem. The section 1, generally we analyze, but because you have already read the case, so you already know when the company was formed and what services they are into. Safewell, it focuses on security and does not offer other type of services such as facility management, and obviously they sometimes frequently, or you can say frequently, compete for the same tenders or assignments. So they are pure competitor for each other, where Safewell has some speciality, some they have specialty. This is to be discussed in the section number 1. Now you can see here is the competitor and here is you, and this is a financial statement and called consolidated statement of profit or loss for the year ended 31st of December. So in so many ways you can see very easily that the revenue is 16.84, while the competitor is a bit smaller than you, 12.4. So means that because we are a senior manager of Safewell, and so we need to think about us from a company point of view, and they are our competitors, and we can see that we are bigger than our competitors. Then, of course, we have an operating profit. They also have operating profit. So we need to see if we are in operational case study, we might calculate gross profit ratios. But because it is strategic case study, so we are looking not to the profitability side. We're looking more into amortization, asset revaluation, impairments, business valuations, dividends, share prices. These are strategic issues. Profitability, working capital, this is very important, but it's not a strategic issue. So first thing that as a student, you need to learn that what is strategic and what is operational. So operational, we will not focus on because already there was an exam for OCS, operational case study, just finished. Now they want to check your strategic level discussions. Finance cost doesn't vary, so means that there is no additional borrowing for this year, and for competitor also the same. So here we can say market in general didn't move that way, that both of them go for further funding or financing, and you will see the reasons shortly how it is. And then they have profit. Both companies are in profit. Your profit is much higher than your competitor. So you seems like a market. Obviously, you're not a market leader in terms of number one, but this competitor is that he has selected, the examiner has selected for us, is a bit smaller than us. Now let's discuss the changes in equity. So this is also a financial statement, very important for shareholders, and it's purely a strategic matter. Thinking about shareholder, share price, this is all very strategic. That's why we need to focus on that. Now, we can see they have share capital, retained earning is coming from the profit and loss account, and there are some reserves we can keep it for special purposes. They have been kept. Profit for the year is 2095. You want to match it. This is 2095, which came for the year. And the very important thing is, you can see that we have a profit of 2095 while we are giving a dividend of 1869. So if you are a shareholder of this company, you might be very happy because you are getting a lot dividend. But at the same time, it can be taken as negative. Why? Because if the company is giving me, if I'm a shareholder of Safewell, company is giving me all the dividend, all the profits as dividend. So what they are investing in the company, that's the major consideration and question that I can keep it in my mind. So dividend policy is a strategy setting practice. So we need to make sure that we are very, very competitive and we are doing something which is sustainable, durable, and we can maintain it. So you can see almost 90% of the profit has gone to the shareholders, means the company is not going to grow. They don't have left any kind of profit to be utilized for that. But on the other hand, we can rely on the bank balance. Maybe we have a good bank balance, so from there we can fund our initial investments. Now let's go and see the competitor. This is Brutto, whose profit for the year was 1353, which you can see here. 1353 has been in statement of changes in equity, and you can see that out of 1353, they have given 1169, quite a huge returns on profit as a dividend. Again, the same consideration, but we can also see strategically that the investors of similar kind need a high level of dividend, otherwise you will lose them. So there might be a market challenge the company has. So this kind of considerations we have to keep in our mind when we are going to analyze the question in the real exam or in the mock exams. We have to tell these things, which I'm telling you, that dividend is this much of percentage. Competitor also have this percentage. It might be because of that. So this is a very important stuff. Now they have loss on translations. Both has loss on translation. If you see, according to their size, the reason, what is translation? If you are a company who works in different countries, and you convert your accounts into at a certain date, maybe at the end of the year, you feel yourself that you have either a gain or a loss in terms of your translation. Translation, we do it once in a year. We don't do it regular. We do have gain and losses on transactions which go every day, but this is a special strategic level translation for the reporting purposes, which can cause you some kind of gain and losses. So these are the good observations in the, you can say, the changes in equity. Now moving forward, let's see the balance sheet. You can see that the 998 assets, property, plant and equipment has grown. So it means that this year the company has bought some kind of equipment, plant or property. This is, we will see what further information is available for us in order to see how things are moving. Goodwill is always remains same until it is not impaired. So you can see that the company didn't lose the trust of the customers. The goodwill remains same. There was no market changes in that. They do have intangible assets. You can see that intangible asset has gone down. It may be an impact of impairment. So tangible assets, we use a word depreciation. Intangible assets, which we can't touch them, but they are very precious, like copyrights, patents, goodwill. They might have a bit of impairments, regular impairments over the period of time. Trade receivable also increase, means you have given some kind of credit changes. Your sales department and your credit department is giving more time to the customers to pay, so it's creating a little bit more trade receivable for you. And you can see that quite a good money, 1.6 million cash is already in the pocket. Moving forward, the other side, if you see, same trend, property, plant and equipment has increased. And you can see that it's the same like your competitor. The competitor is also doing almost the same. The goodwill of competitor doesn't change, so means market is not going in kind of shock or recession. And intangible assets slightly increased. So maybe they have developed some kind of software, internally generated stuff that we will see more in detail. Trade receivable slightly increased, and bank cash is not that much as you have in your company as SafeWell. So your company cash position is extremely good, while your competitor is 50% around in your space. Your assets are more than your competitor. So in any ways, you are a better company, and obviously for them, you are the market. You are challenging them, and you have to see how to make yourself more competitive. Now let's see the equity side. So your equity is also more, your competitor equity a little bit less. Your reserves are there, the reserves are there. And retained earning is 2.8, 1.4. So almost you have double of the profit of your competitors. This year, no more borrowings, and even your competitor didn't borrow anything. It means that market, you didn't, obviously you give all the money to your competitor and to your dividend shareholders. So maybe you are not thinking this year to start any new project which require funding, or maybe you took something, but the funding will start paying back from the next year. So maybe, incorporate and capital budgets we need to see accordingly. Trade payable slightly increased, tax liability increase, and both are same. So here is your equity and liability side. So the highlighting point I will summarize for you. Not everything is important in these statements from examination point of view. So let's move towards the very interesting compulsory question about shareholders. So any question will come in your section 2 financial. We have to talk about dividend. We have to talk about cash balance. We have to talk about share capital. These 3 paragraphs will be most. So let's see this graph. It's telling you SafeWell share price. It ranged between 28 to 93. So you can see this is 93, which is the largest one. And this is 28, which is the smallest one. So this is 28, this is 93. Now you might be thinking now, what's the reason of, it's exciting to know that what is the reasons. Whatever your price is down and up, there is an average price you can see. So you fall somewhere in between here, that's your average price. But in all the exams of CIMA strategic case study, he don't give us the reasons of these ups and downs. So 99% we need to assume that what's going on, what could be the options, and we have to link, of course, the other informations with this information. But top of it, let's assume this is 2024. So first of all, I don't know what about my competitor, because competitor information is not available. So, and I need to mention this in my exam that the industry decline or change or the market is not known to us based on a limited information in the case study. So here we are saying that 2024, your price was around 38, and in 38, you are a profitable company, you are growing, you are innovating, your revenues has grown, your asset has been grown, you are not in a problem at all. So it means that the share price downfall didn't impact your other variables. So it's maybe more shareholder or market driven. And for that, there is a term called beta. So those who are familiar with stock exchanges or have studied finance before, you might know that there is alpha, there is delta, there is gamma, and there is a beta. These are all as being used to describe a particular situation in finance. So beta, we say, is a measurement of your equity, SafeWell equity, and the market itself, market index. I'll give you an example. Suppose market is crashing today, stock market, but your company share is still there. There's no crash because the company is in profit, you have no losses, you have good sentiments for the market, and your new products are going very fine. So sometimes it happens that your company is solid and the market is volatile, keep changing. Sometimes opposite, the market is stable, but your share is moving up and down. So this we measure through a term called beta. Now, just to memorize this, there is a beta which is given to us. It should be in your brain. In the exam, we have to write beta is 0.88. And there is another I'm going to give you is called ungeared beta. The ungeared beta is a more purified form of the beta. It will be always less than the one that is we have. How to do it, what's the difference, I'm going to explain you as it comes in. But so far, if we get sick, we have a temperature of the body. So if you assume that that is similar with beta, that if the market, how to measure the market temperature, who's stronger, who's weaker, there is a term called beta. So beta is given, but the beta for competitor is not given. So we can't say that market, because if I know mine and my competitor, I can assume that this is the market practice. You will see like shortly. And even I told you that whatever is we are happening, like we have given a big dividend, our competitor is also giving a big dividend. So there's a market practice, business realities. You can't change them That's why the strategic case study is opening and discussing our minds for that. Can we consider the retained earnings for dividend distribution? Yes, because dividend is out of the profit. So retained earning is also coming from the profit. So we can combine them and can pay, that's fine. At the end, it's the income. The law says that you have to pay things from the profit. So dividend need to be paid out of profit. That's the important stuff. Okay, coming back to, so the normal beta is 1, means if 100% change in your share and 100% share change in the market, so you both has changed 1, like 100 divided by 100 is 1. So, but if it is less and more, then you have to see you are strong or market is strong. If you are less than 1, safe well is less than 1, means safe well is more stronger than the market. Okay, that's the criteria. 1 is the yardstick. Anything below is you are strong. Anything above, you are weak. Market is strong. There are some additional information I sorted for you in order to tell you what happened with safe well. So safe well, as this is the column that you need to focus, because already I explained you the income statement of 2 years, even with the competitors. Revenue has increased 6.4%. Operating cost has also increased 5.7%, and the operating profit is 9.9. So this is a change in the ratios, or in the, not in the ratios, in the over the year. And we can see the profit also increased by 10.7%. So revenue, cost, profit, these 3 percentages you need to memorize, because we have to reproduce in the exam in order to impress the examiner that, look, we already know that our revenue has grown, cost and GP, and this is our profitability, 10.7% in comparison with our last year stuff. But this slide is really important, because this change column you have to write in the paragraphs, which I'm going to show you as well. Now let's move forward and discuss the safe well growth, which is consolidated statement of financial position. Now you can see that asset has increased 34%. So when we'll do section number 1, we'll see that they want to invest in technology. So maybe they have invested in any technology, is going to increase their assets, and other intangible assets are gone low. And as I told you, it may be a reason of impairment, or any kind of debt is going to retire. I'm not sure, no information is given. We can just assume. Now, in terms of currency reserves, we have 3.51%. They have increased the reserve because there is maybe a currency fluctuation, and later we'll see how we can deal with it in order to handle it nicely. So these are the change columns. Just keep in mind these change columns. Maybe take a paper, write these changes 2-3 times, and it should go in your head. So when we want to reproduce the information, you don't need calculator and you are good to go. Now, very important ratios, as I told you, profitability, operations, profit margins, net profit, they are not much important strategically. So the strategically is your balance sheet, which is your equity, your debts, your assets. So here we have the calculations for the gearing. Gearing is actually the ability to pay your long-term fixed cost of debts. Liquidity is opposite, which is checking if you are able to survive today. We need to calculate liquidity, but we don't do it in strategic case study because it's an operational matter. But for long-term forward looking, we see the gearing. You can see the gearing is 66% this year. So it's quite a higher side. Another formula, 40%, because there are two formulas to calculate. So the one formula, which is the variant two, is more likely to be used, is 40%. So as you should know that if your cost of fixed debt, your leverage or your gearing goes above 50%, you become a red flag, and no lender will give you more money. It means that 50% of your income is your fixed debts. So it makes the lender insecure and more, you can say, not inclined towards you anymore. So effective rate was 10%. So there's no change in interest rate. And interest cover means that you have enough money, means you have 13.5 times money to pay your agreed interest that you have already committed, which means that you are a good company and you are able to sustain yourself. Now let's see your competitors. Competitor also 5.3. So I would suggest you make a change column for you, Safewell and Bruto, change column. And for example, how much they change 6.4. So 6.4. How much your competitor revenue has changed? 5.3%. So this way, if you make your own notes, you'll be able to write the changes about you and your competitor. That would be an interesting area to work on, and it will save a lot of time, and at the same time, it's gonna impress your examiner a lot, because examiner is looking for these things, the percentages reporting to the board in a very open way without taking any position. We don't take any positions. If we are not decision maker in this case study, we are a senior manager reporting to the board, and board is responsible for taking decisions. So we never say do it or don't do it. We say if you do, these are the advantages. If you don't do, these are the cons, like pros and cons. And board will decide according to their own strategy. So we don't take any decision. You will see a lot of questions like that asking you about the feedback, opinion, and as I told you, we can't take any kind of opinion. We go for pros and cons and leave it open for the board to decide. That's for the change between, and this is the change for your balance sheet or financial position, you name. So their assets has also grown up, like your own company, Safewell. Your competitors' plant and equipment has also gone up. So it means that you are doing something, they are doing something in terms of equipments, plant, and property. Rest all, you can see that their bank balance has increased 18.4%, which is a good sign. They are becoming cash healthy company, and it's going to help them a lot. And then retained earning also increased 14.3%. So this is what is about. Let's see the gearing. So their gearing is very high, 52%. As I told you, 50 is the threshold. Anything above is going to create a problem. Their interest coverage is less than yours. But the interesting thing is that they are paying 10%. So means that the banking they are using, they are treating these two companies in the same credit rating, and they are giving a same rate of interest. So means that they are true competitors, and there is no competitive edge on each other in terms of financial figures. Okay, let's see the comparison. I put it this way. This is for the Safewell, and this is for the Bruto. So you can make two columns and remember these figures. And here we have I made a summary for you. So this is the Safewell first year, second year, and so this is 2023. This is 2023. So you can compare here this, with this, with this, and this. So it's going to give you a lot of push. You need to memorize all these terminologies and the figures so we can reproduce them in our real exams. So this is what is called Preseen analysis, where given information need to be filtered, known, and analyzed. So we analyze in terms of ratio and a couple of other things, dividend observation, and we'll see some couple of exercises and how it goes. This will be clear shortly.